Hi, I'm Ross Mayfield, investment strategist at Baird, and we are back for another weekly update with our friends at Strategas. First one of the year. Today, we are lucky enough to be joined by Managing Director and Senior Technical Strategist Todd Sohn. Todd, how are you doing today? Happy New Year.
Hey Ross, Happy New Year, and always great to speak with you.
Yeah, good to talk to you as well. I want to kind of set the stage of what this market is as we get started in a new year. We've seen kind of a rotation from tech into some other corners of the market in the fourth quarter. To date, we've seen a little bit of that continue to start the year, although only a few trading days. How would you take the temperature of this market as we start the year? Do we have momentum? Do we have breadth? What are the important things to watch?
Yeah, great questions. We have breadth, we have participation. There's no better reflection of that other than the equal weight S&P 500, which is basically right at a new all-time high. Equal weight the Russell 1000, that's also at a new all-time high. So participation is not a problem. You're also starting to see the new high data expand for the first time really in about 8 months or so. And that's a reflection of financials, industrials, materials in on it, some discretionary, right? Lots of cyclical offensive sectors are participating. And I would extend this to equity markets abroad, right? This is not just a US story. You have European indices at new highs, Japanese indices, Korea, right? So there's a global bull market going on. Of course, sentiment will become a risk as performance continues to perk up, but things are pretty good as we kick off the new year.
Well, let me ask you about that because you do a lot of work, looking at capital flows in and out of sectors where investors are voting with their dollars. Is sentiment the biggest risk right here? And if it is, how close are we to a point where, maybe if it's not flashing red, we're at least seeing the yellow light?
Yeah. I think the yellow light is appropriate, if not a red light. ETF flows from the equity point of view have been very aggressive. It's part embracement of the ETF vehicle, but also an embracement of the rally. I also like to track levered assets, levered ETF assets. That's really similar to the start of 2025. And we had a little bit of a speed bump in the first few months of the year. So I do think I would just be on guard for a corrective action. It's also a midterm election year. That could set up for some volatility. But do we think it's enough to derail the bull market? No, but more of just, the setbacks that come with investing. So I think a sentiment reset is probably in the cards, but again, the participation's still there. The backdrop is still there to want to weather through it and make sure your portfolio is ready. There's plenty of different ways to do that outside of, say, the large cap growth and tech space.
That makes a lot of sense. So as we've got this rotational market, we've got strong breadth. We know about tech and communication services, what the story is there. As you kind of pour over the charts and look through the different sectors and industries, what's an unloved sector or industry that you think is worth a second look as we start 2026? Take your pick, but there have been a lot of sectors that have been laggards for many years or just not as exciting maybe as big tech. So what's an unloved sector that you've got your eye on to start the year?
So I'll pair these two off. One is a sector, it's healthcare, and one is more of an asset class that is very heavy on healthcare, and that's small caps. Flows to healthcare and small caps have been dormant. We're just coming off the first year since 2011 that small cap ETFs have had outflows altogether for the year. That is extremely rare, especially for an important asset class. You've seen some money come back into healthcare as performance has perked up, but that's a sector that's been in the bottom decile in terms of relative performance versus the S&P 500 over the last few years. So it's in a territory of statistical extremes, and we look at that as very opportunistic, very contrarian, and we think healthcare is a great place, especially within the context of a midterm election year. Seasonally, that tends to be beneficial. But it's one that has diversification benefits, right? I can get pharma or I can get high beta biotech. I can get growth and value within healthcare. We think there's ample room for this sector to continue to assume leadership and take a larger slice of portfolios, especially if you see any sort of slowdown from big tech or AI, given all the abundance of activity going on in there and some questions about their future growth rates.
Yeah, absolutely. Well, Todd, this is a perfect way to start the new year. Table setting, hoping for another great year in the markets. But either way, we'll look forward to talking to you again soon. So thank you for the time.
You too, Ross. Thanks a lot.